Oh, hi everybody, this is Mark Boardman. I use something called the FX Trend Catcher system to place my trades. It's a very simple three-step system. I'm just going to talk you through first of all the trades that I left my trading room with yesterday. That would have been, that's the Thursday the 16th of August it was yesterday. It's currently Friday the 17th of August 2012. So when I was in my room yesterday, I left you guys with two trades that I had on. One was the Aussie yen, which you can see here, the Australian dollar versus the Japanese dollar, and I was long. It was a re-entry here because I had the green forex volume. Yes, that is real FX volume. You can see there, that's taking the tick data and converting it into a buying or selling volume bar. Very powerful. We have the green heat map and the green trend dot. So I entered the market there. That was 9 AM UK time at 82.66. The indicators kept me in the trade up until this point here. I exited the market at 10 PM. That was at 83.04, so there was a 38 pip profit there. So that was one of the trades that I placed live in my trading room yesterday. I'll show you the second trade in a second. That was the pound against the Canadian dollar here. I'll explain how I got these signals shortly. For those of you that haven't seen this system before, or for those of you that haven't been in my trading room, this was an entry of the pound versus the Canadian dollar. I left you guys with this one as well. I entered at 3:50 PM. At 1:55.52 and exited the market over here at 7:45 PM at 55.23. So there was a 29 pip profit there, so that gives me a total of 67 pips profit from those two trades. In today's room I placed 5 trades. I'll just talk you through those 5 trades quickly. The first was with the euro dollar. This was on a 5-minute chart, and this was early this morning. I got up early this morning. I entered the trade here. The details of that, I entered at 6:20 AM UK time at 1:23.47. Exited the market when the indicators told me to. Here, that was at 1:23.58. That was 11 pips, and that was on the euro dollar 5-minute chart. Not long after I exited that trade, I got a signal to enter a short trade, also on the euro dollar, but this time on the 1-minute chart, which was here. I entered that trade at 1:23.61. That was 8:36 AM UK time. Exited the trade at 9:04 down here at 23.52. So that was a 9 pip profit on that 1-minute trade. I then moved on, and at 9:34 AM I got a signal to place a short on the US dollar versus the Swiss franc. That was this trade here. These are all trades, by the way, that I placed live in my trading room. I'm not missing any out. I'm not missing the losing trades out. If you come into my trading room, they last about 1.5 hours, 4 days a week, and all I do is look for live trades. So you get to hear the positive trades and the negative trades. This was the third trade. This was the Swiss dollar against the the US dollar versus the Swiss franc. The entry was at 9:34. That was at 97.19. The market then came down, and I stopped out here at 97.06. So that was 13 pips of profit. That was that one. The other trade I left you with in today's room is one that I'm still in, and that was the New Zealand dollar versus the Japanese yen, which, if you bear with this system, the fact that I'm recording this screen does slow things down somewhat, but this is the trade here. You can see I got the signal here today, and I'm still in that trade. Okay, so that's heading south, currently in around about 20 pips, 30 pips profit. That's an hourly chart, by the way. I get signals on all time frames. I tend to put live trades on much shorter time frames, just so that I can prove to the people in the trading room that this system really does work. I'm not a believer in just looking back historically at trades, because anybody can do that and pick out good trades. So you only on these videos you'll only ever see the trades I actually place. So that was the fourth trade. So we've had two profitable trades on the euro dollar, a profitable trade on the dollar Swiss franc, and the fourth currently profitable trade on the Kiwi versus the yen. There was one losing trade today. That was a signal we got on the Australian dollar versus the US dollar here on the 5 minute, and we entered here at around about 9:20ish, and we were out the market an hour later with an 8 pip loss. So the net total profit for today's room is 25 pips, and for yesterday's room we had the two that we were leaving the room with. So each day I talk about the trades I leave the room with that are still live, if you like, and then any that are closed out during the room itself. So for example, today I've talked to you about this Kiwi versus the yen. That's not closed out yet, so we'll review that one tomorrow if it's closed out by then. Yesterday's trades were that 38 pip Aussie yen and 29 pips, giving me 57 pips from those overnight trades. So add that to today's 25 pips, so we're up 82 pips today. So we've had an 82 pip trading day in the trading room. If you're wondering how, if you've not seen this video before, if you're wondering where I got these signals from, we use two things. We use these indicators here. These are based on volume price analysis. At the bottom you can see Forex volume. It's the only system that I'm aware of in the world that has this, but it then looks at the volume and says, is it buying or selling volume, and then it looks at other market metrics and determines whether or not it's truly bullish or truly bearish. And far more often than not, this system is correct. Now, to complement it, in terms of which currency pairs we trade, we have a unique indicator which is amusingly named the Fat Man. And the Fat Man looks like this, and you can use this in all time frames. The principle of the Fat Man is quite straightforward. No currency in any given time frame can ever rise too highly or fall too low for any sustained period of time. Now, this looks like a painting to some people, modern art perhaps, but what it is in fact is a currency basket, and all the currencies are being compared to each other. Where we have a currency, and in this case we have the US dollar here in light blue, rising to the top above these two lines, I call that the ceiling. We know 100% of the time, not 90 or 95% of the time, 100% of the time, when that happens to a currency, it always snaps back. So if you look on this chart here, anytime you see a currency hit the floor, which I call this the floor, or the ceiling, it always snaps back every time. So all we do with this system is wait for a currency to get overextended either to the upside or to the downside, and as it's snapping back, we then compare it to the other currencies, look for one going in the opposite direction, and then we get in the trend early. That's why it's called the FX trend catcher. So for example here, this is a 50-minute chart, and we can see that the dollar is going to weaken eventually. So in other words, the dollar at this point here is too strong, if you like, and it has to weaken. This is where the currency market is unique, because currencies do trend more than any other market. They ebb and they flow, but like I say, on any time frame they cannot rise too high or fall too low for a sustained period of time. Here's an example at the bottom where you can see the red line. This is the Australian dollar, and it's tried to stay low for as long as it can, but it can't. It has to eventually rise back. I won't go into why that is. I explain in my trading room specifically why the currencies behave like they do. There is a particular reason for that, and it's to do with interbank liquidity. And if you're welcome to join my trading room if you want to find out more about how this system works. It's called the FX Trend Catcher. Then just register for the room by going to www.hawkeyemt4, that's HAWKEYEMT4, EYE, M for mother, T for tango, the number 4.com, HawkeyeMT4.com. And if you come into the room, not only will you get to see these trades like the ones we've looked at today, but every day you'll see live trades, and you'll see that this system has a remarkable track record. Thanks for listening, and have a good trading day. I'll hopefully see you in my next trading room. Cheers. Bye bye.